Hello, everyone. Today on the Final Bar, we're joined by Joe Rabil from Rabil Stock Research. He's going to share with us a couple tickers top of mind for him as he's reviewing the charts in his process. Market accelerating to the downside really into the close as we're getting ready to record the show. I'm seeing the line go further and further down. So we'll see where the S&P sort of closed out. What we saw in terms of sector movements, overall, definitely a move more toward the defensive side of the ledger. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we look at these markets together, focusing on price, focusing on the message that the markets provide through price. This tells us about investor psychology. This tells us whether people are buying or selling. People are nervous, excited, desperate, panicked, optimistic. All of that is reflected in the orders that they're placing. And the charts arguably would reflect that as well. You know, as we're getting ready to start recording, I'm seeing the market accelerate to the downside. And I recently just watched Trading Places for the first time with my teenage daughter, and was going through the natural Q&A session at the end about what these people did to actually make the price go down. And I felt like I was watching that as the ticks were going lower and lower on the S&P. So overall movement more toward the defensive side of the ledger. That was kind of building through the day. I think one of the more interesting movements was tech, which was near the top of the list and actually finished sort of mid-range. I think that tells you some of the internal weakness in that particular sector, which we dug into a little bit on yesterday's show. Coming up, we have a great guest today, Joe Rabil. He really knows his stuff, and excited to see some of the charts he's been looking at recently. On Thursday's show, the 20th, we have Katie Stockton from Fairlead Strategies joining us again. Next week, we have a couple of really good guests, by the way. We have Louis Yanis coming up on Tuesday, the 25th. On Wednesday, the 26th, Javed Mirza from Canaccord Genuity. On Thursday, the 27th, Jeff Huge from JWH Investments. Also, two other really cool events to make you aware of. Next week, all week is called Chart School, and we're going to be focusing on idea generation. We have 5 different experts all providing with you the charts, particularly the scans that they used for idea generation. What scans do they build? What do they review regularly to come up with buy and sell ideas? They're going to show you under the hood what they use, how they set it up using the StockCharts scan engine. That should be really cool, especially if you're unfamiliar with that part of the product. Then coming up on next week on May 27th is the pitch. I'll be moderating a conversation with 3 fantastic panelists: Danielle Shea from Simpler Trading, Aaron Swenlin from Decision Point, and Mary Ellen McGonigal from Mem Investment Edge. They'll be sharing their 5 stock picks each, and we'll debate them as a group. Let's get to our market recap. And again, as I mentioned, some distribution going into the close today. We had a poll recently where I was actually asking, it was actually a really interesting poll question about what books you read outside or read outside of the financial literature that helps you think about investing. Got some really interesting things. We'll see what we can do with that list, maybe feature it in a future discussion. But the poll up right now is actually an interesting one. Which of the Uniteds performs best over the next 3 months? And I gave you 4 Uniteds to pick from: United Airlines, United Parcel Service, United Healthcare, or Manchester United. Let's see which of the 4 gets your vote for the best performance prospects for the next 3 months. That's running on our TV page now and going out on social media shortly. So the market accelerated to the downside. Really the big sell-off was in the afternoon. It was sort of sideways choppy for much of the day, sort of took a downturn, and the S&P bounced off of 4140. And for a little while there, around 315, 330, sort of looked like it was going to settle in with a bit of a recovery into the close, but a real acceleration to the downside. And again, I'm not seeing what may have caused that besides just broad selling pressure, but that's certainly what's weighing on the markets right now. The S&P closing down almost 1%. That's from being flat earlier in the morning. So the institutional flows, sort of the end of the day vote, more from larger institutions, ETF rebalances, and stuff like that. It's pushing the S&P lower to 4127 or so. Mid caps and small caps down a little bit more, but essentially in the same ballpark. And the VIX is back above 21, which is back sort of in that normal region for much of 2020, right? So that's a little high for what we've seen recently, but overall still within the normal range there. 10-year yields essentially flat, with the TNX essentially where it was at the yesterday at the close. Bond prices down just a bit, and the dollar continuing to weaken. Precious metals mixed, with gold up just a little and silver down a bit. Commodities overall lower, and energy was the worst of the 11 S&P sectors today. Cryptocurrencies actually, for the most part, higher, except for Bitcoin, which really rolled over in the afternoon and is trading below where it was yesterday at this point, around 43,240. Sectors very quickly. We had real estate up and most other things down. Utilities and healthcare, again, going into the close, things are sort of, we're still processing sort of those final ticks. And Utes and healthcare, just basically a rounding error above zero. Real estate 0.2% higher, but most things were down. And the cyclical leadership that we've been looking at, energy, industrials, financials, materials, these are arguably some of the better long-term charts that we've been talking about recently, all giving back the most today, followed by communication services, technology, and consumer discretionary. So this is not about value underperforming growth. This is about everything underperforming defense, right? And the defensive higher yielding sectors tended to do much, much better. So this was more of a risk off move and less of a changing your rotation of leadership. I would argue this is more of a rotation of whether or not we want to own stocks. Let's look at a chart of the S&P 500. Again, it moved a lot here toward the end. What's interesting is we closed almost right back at that 4120 level. What's interesting is that was the level in mid-April that we talked about. We sort of bounced off of it in early April. We tested it again in mid-April. As we came back down and tested it in early May, we talked about that as the line in the sand. That's why that break about a week ago was really meaningful, because it was finally getting below the most recent swing low. And on that tactical time frame, that short-term time frame certainly felt like a signal on the downside. What's happened now is we've pulled back 4.5% there last week, right down to trend line support, right down to the 50-day moving average. Now we've bounced higher. We break 4120 again. I think all eyes continue to be on this trend line support and also the 50-day moving average, currently around 40.75 or so. And I think a break of that through the course of this week into next, I would argue, not only does that sort of give a negative follow through for stocks in general, but for that to happen, a lot of the individual stock charts that look okay, that are holding support, would most likely break support. Stocks that have been rallying would most likely start to give back some of those gains. And I think the individual stock charts will start to reflect the risk off posturing. And again, that's a huge if, and that's the if we break sort of that 40.75 level. By the way, I would argue 40.50, which is the swing low from last week, that's what you'd really need to confirm a new downtrend. Then you've established a lower high, a lower low, and I would argue the path of least resistance at that point would be lower. But first things first, we've got to break some key levels there. Let's look at a couple other charts very quickly here and see what sort of moves we can find. So there were an interesting handful of things that were higher. If you look at the groups that were actually at the top, renewable energy equipment was the number one industry group in our list at about 105, 106 of them. And that's an interesting one. It's within tech that was obviously has been relatively weak recently. This is the group we have solar stocks, hydrogen names, batteries, those sorts of things are in that group, and it was the number one. Things like travel and tourism, gambling, these are some of the reopening stocks that were up at the top. But then you also have miners, right? Gold mining up there at the same time. So sort of an interesting mixed bag at the top. On the downside, you have fixed line telecom. Now that's probably weighed down a lot by AT&T and Verizon, both which had relatively brutal days, among brutal days recently. A number of industrials in the bottom 10 here as well. Heavy construction, marine transportation. Again, these are some of the longer term trends. Trucking companies, these have been pretty decent trends, right? JB Hunt and others, not bad, and certainly giving it back today. So the question is, how much of this is a short-term pullback? How much of this is really rotating lower? Let's look quickly here just to hit on a couple other charts here. AT&T is one that we talked about yesterday, if I remember right. It's a blur of sorts, but a big gap higher, but then closed lower. And I hesitate to call that a bearish engulfing pattern, because that you really want a big up day followed by a big down day if you're a candle purist, which I don't know if I am, but I do appreciate calling them by their appropriate names and following the discipline, and having a smaller day and then a wider day is not really the essence of that. I would call that a bearish outside day though from bar charts. And what's interesting is the follow through. If you look what happened today, a big gap down there. Now AT&T obviously going through the whole discussion of the Warner Media part of that, and Discovery. All of these are sort of wrapped up in the same distribution. So this is Discovery, DISCA, same thing, a similar candle yesterday, but now getting back below its 200-day moving average for the first time since November of 2020. Verizon was down as well, right? So back below, actually right at its 200-day as well. Verizon hasn't been the best chart, to be honest with you. One of my analysts at Fidelity, when I worked there, we used to talk about Microsoft. It just doesn't chart well, was what we would talk about. There are certain stocks that would just be in these beautiful trends, very clear signals, and Microsoft, and this is sort of in the mid-late 2000s, early teens, would just be in these choppy movements. It just didn't make any sense, and breakouts would fail, breakdowns would fail. And that's kind of what's happened, right? You see Verizon breaking to a new swing high in December and it fails. You see it breaking to new swing lows in February, and then that fails and it bounces back to the upside. So it's really more of a range bound experience on the stock, and really unable to follow through on one way or the other. We need to take a quick break, and a little later, we're going to feature some of the stocks that are around earnings. Some earnings this week, especially with the big box stores, companies like Walmart, Target, Home Depot, and others. We'll take a look at some of those stocks and what you should know. Let's take a break. We'll be back with Joe Rabil. See you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. It's so good to have you join us every weekday after the close as we try to make sense of these markets together. Again, quite the distribution going into the close, but let's focus on the long-term trends and how those have been impacted. Plenty of stocks holding up, plenty of them at key support levels that we need to be aware of. As a reminder, we're going to do another mailbag segment a little later in today's show. You can get your questions to us a couple ways. Shoot us an email, thefinalbar@stockcharts.com. We are on Twitter at FinalBarSCTV. Finally, on our YouTube channel, just put a comment right below the video that you're watching. We'd love to hear from you. We'd love to answer one of your questions in our next mailbag segment on Friday's show. I want to welcome on my guest today, Joe Rabil. Joe's the founder of Rabil Stock Research. He's one of my favorite, what I think of as a pure stock picker. When I talk with Joe, I tend to have a list of tickers that I want to dig into afterwards. Joe, welcome back to the show today.
Thanks for having me, Dave.
So chart number one, we've talked obviously about quite the distribution going into the close today. You're starting us in the technology sector, which has been certainly an area of focus for a lot of investors with some relative weakness, but you're sharing with us a compelling chart. Talk to us about VMware.
Yeah, so it's not an ideal situation because I tend to like to look for stocks that with the sector behind it, but I'm also looking for independent movers, ones that are kind of doing their own thing and maybe beating to their own drum a little bit. And this really fits that description. And also there's a few components to, I'm always looking for new emerging basing patterns. And there were just some, I thought, compelling things about this that I thought it was worth talking about. Because really when I'm looking at a basing pattern, I'm looking for compression. And compression to me, the way I kind of define it is when you have low trend strength, but you also have low volatility. And so the trend strength can be defined by the blue line at the bottom, the ADX line. And we can see that really since July, it's been down at a very low level, July of last year. And it's really just been hanging down. And really all three lines, both the DI lines and the ADX line were low for an extended period. So that just says there's really no trend strength whatsoever. And typically, before a stock makes a big move, you look for, normally it'll be some kind of like a low volatility, low trend strength, and then we get emergence out of that. And so anyway, so that's the low trend strength. The low volatility, I've actually overlaid the zigzag on here. And I really love the ACP product, by the way. Really nice. Continue to make nice improvements all the time. But I put on this zigzag because I wanted to show what was taking place from a low volatility standpoint. You can see the lower high that I've kind of shown there with the horizontal line, and then a higher low. And so that is that's an inside swing. And then we have another lower high and then another higher low, and you get another inside swing. So it's the type of thing where the size of the swings are shrinking. And when you get that combined with the low trend strength, it's normally a good, those are the types of stocks that I really like to look for as they come out of the base. So that was kind of my reasoning for wanting to bring that up.
I love that illustration. You remind me, the zigzag indicator is not something I have on my charts often, but I love the, just the illustration of the move. I mean, it basically identifies those, the highs and the lows that are sticking out. It's sort of what your eye should be doing. It probably isn't doing very well. This really clarifies it. And really, you're showing the narrowing of the range really well there.
Yeah, I used to use them all the time, and I call it training wheels for learning price structure. I think it's really great. If you want to learn price structure, you throw this on for a while, and I think it'll really help.
Trading wheels are maybe a good reminder for those of us that have been doing it a while and need to get back to the basics sometimes. Now, stock number 2, we're going to talk about Tesla, but I want to make sure that everyone knows you actually have a new show coming on StockCharts TV called Stock Talk with Joe Rabil, which I'm super, super excited about. I know it's coming up June 17th. Talk us through what can we expect from that show, and then hit us with Tesla.
Yeah, so I thought Tesla was a good representation of how that show might end up going. But so what it's going to be, the 30-minute once a week show that you guys have. But what we wanted to do was take stock requests, and for the bulk of the 30 minutes, I'm going to be going through, taking the requests in, and I'm going to be going through the stocks and doing the analysis that I've been doing for the past 30 years for institutional investors. So most of my day, a lot of my day is spent fielding questions from institutions, and they'll basically say, hey, what do you think of Tesla? Or, what do you think IBM? What do you think AT&T? And so I kind of give them a read based on trend, momentum, support and resistance, and that type of thing. So that would be the goal. I am going to spend 5 minutes at the beginning and go through, do sort of an educational segment. And I'm going to talk about the ACP product and how I'm using that during that 5 minutes. But, the bulk of it, I want to really just kind of spend talking about individual stocks. So if we looked at something like Tesla, one of the things that I've been on the show a couple of times is I really like to use multiple time frames, and sure. That is something that I will spend a lot of time on the show. And so on the left side, I've got a monthly chart of Tesla, and on the right, I've got the weekly. And I use the exact same indicators for every time frame that I look at. And so on the left, you can see the big move that took place, and there's sort of like a light purple, like a magenta colored line. That's the 18-month moving average. And I think what it shows is how this is a very strong trend. I mean, there's no doubt that this is a strong trend, but look at how far away it has gotten away from that line, especially at the peak where it really surged into a kind of a climatic peak. And so when I look at that, I think, okay, we need to spend some time working off this overbought condition on a monthly chart. And then if we go over and look at the weekly, for the first time since this really took off back in early 2020, the 18-week on this line I've circled has actually rolled over. And so we've got sort of the long-term trend is up and overbought, and the short to intermediate term trend has kind of, at least in the near term, has rolled over. I put the box down there between 450 and 500 as sort of a support zone that I'm looking at. And I've got a couple of reasons for that. If you start from the low in March of last year and you go up to the all-time high, the 50% retracement is right around just under 500. And then actually, if you take the 900 number at the peak and divide that by 2, or take 50% off the high, that's around 450. WD Gann was, I spent a lot of time studying him. And so this, the 50% off the high is a very important number based on his work. And so I've always kind of kept that in mind when I'm looking at big moves in stocks like this. So that's kind of where I'm zeroing in. I wouldn't necessarily have an order waiting there. It really depends on what it looks like when it gets there. But that's sort of, I think, what my target is for this decline right now.
It's a great example. Appreciate you talking through the multiple timeframes and focusing on some actionable levels there, Joe. Thanks for coming on today. Best of luck to you and good luck with the new show. We'll talk to you again soon.
Thanks, Dave.
That's Joe Rabil. Joe's the founder of Rabil Stock Research. And as he mentioned, we're super excited to have him hosting a new show. He's done a great job with Your Daily Five, which is one of our shows. We have a series of guest hosts, and we've had great responses to some of the things that Joe has been doing. We thought it'd be really cool to give him a little bit more of a platform. So should be sort of a Q&A style opportunity for you to get someone like Joe to review tickers and charts that are top of mind for you. So look for some further announcements on that. That's coming up June 17th on StockCharts TV. Let's continue on with this show, focusing on the final bar mailbag. This is our opportunity to take some of the questions you are submitting to us about analyzing the markets, about technical analysis. No questions are out of bounds. Let's see where we can go. Question number one, currently I'm only a student. Is there a tutorial or a demo to show me what some of the other membership levels can do? What exactly is a chart list? I only have one. So you're absolutely right. So there are some ways that you can learn more about stock charts, of course, and I hope you wish you well in school and think about hopefully there's an opportunity to use more and more stock charts as you continue on. If you go to stockcharts.com/pricing, it shows you the different pricing levels basically for our platform. And when you're looking at the extra and pro levels, basically the big opportunity is to customize it. Number one, becoming a member allows you to save charts, allows you to look at intraday data, create annotations, do all sorts of really, meaningful stuff and make the product your own. But when you get to the other levels, you can do things like save chart lists, you can scan, set alerts, and those are really powerful ways to get the platform to actually do some work for you, as opposed to you having to do it on your own. Chart lists, by the way, just because you asked about it, these are my chart lists. If you go to your dashboard, click on chart lists, you'll see a bunch of these. And this is basically my process. I have a bunch of bookmarks up here in Chrome, and I'm going through these chart lists one at a time. And I have a series of about 12 of them that I review every morning. I have a different set that I review every week. I screen for new ideas, stocks making new highs. I save them in a chart list and then flip through the charts one by one. It is a really, popular part of the product and a really important way to supercharge your analytical process. So I hope you can check that out for sure. Next question, in terms of reviewing charts of holdings or even a watch list, do you look at the ticker first or the chart first? If ticker first, you can surmise based on the previous days or weeks action and sectors where you expect that final bar. Or if it's chart first, it's a fresh view, but you'll get the view of the chart without looking at the ticker. It's a really interesting question. I don't know if I've ever been asked that before, but what's really funny is we actually did academic research on this exact thing at my previous employer. We actually did research. We used eye tracker methodologies. We actually tracked where people were looking on a series of charts and asked them, and then asked them a series of questions, asked them about their experience. And what we found was novice investors, when people are just getting started, novice technical investors, by the way, these are people looking at charts, they would sort of look all over the place. So faced with a ticker, this is Charter Communications, here's all the data, here's the information about the stock and everything. Their eyes would sort of go all over the place. They would look at a lot of different things, and then they would make their decision. Trained technical analysts who'd been doing this years and years, if not decades, would look at a couple key points, and in this order: number one, the current price; number two, off to the left of the current price; number three, the information below the price, focused on the current values; number four, what the stock was, and then they were done. And that is essentially what we proved in terms of, the further you get on with it, you focus in on some key levels that make sense. And there's a very good reason why this show is called The Final Bar, because your analytical process, in my opinion, should start with the final bar. The first thing I look at, and this is literally the chart list I use to review the S&P every week, I look at the current bar. I look to the left to see where we're at relative to key indications and key support and resistance levels. I look down at how the stock's been performing and at the relative, the momentum. Then I look at what the company is. And what happens is with something like Alphabet or Microsoft or Tesla, if you covered up the ticker, I'd probably guess what it is because I've looked at it enough. But if you show me some random REIT that I don't look at a ton, I might not be able to come with Vornado off the top of my head or Simon Properties Group or be able to, differentiate between the two. So that's why I tend to look at that information first and then up to the company and the sector and the group. And that is my process. And I would encourage you to get closer and closer to that the more you look at charts. And mainly that's to avoid some of the biases that you suggest. You want to look at the price and analyze it on its own and then think about what the company is and how that makes sense. Next question, is it time to sell Bitcoin and buy bonds? And you sent a chart kind of like this yesterday on the show. We had a ratio of gold versus Bitcoin. And I mentioned that ratio was starting to turn higher. So what's interesting is if you show most things versus Bitcoin, instead of maybe the dollar wouldn't look like this, but most things are starting to hook higher versus Bitcoin because of the weakness in Bitcoin recently coming off of the lower 60s to the 40s and everything in between, and things like gold starting to rebound, things like bonds holding up basically, right? They're not doing incredibly well, but they're holding up okay. And so that sort of thing is making the ratio go higher. I don't know if that speaks more to the strength in bonds, and given the choice, I don't know if bonds would be the asset class I would most likely want to own here. I would much rather go for something like hard assets at this point if I wanted to be defensive. But I think your point is well taken, which is given the choice between the two, bonds actually starting to outperform. And by the way, this sort of ratio analysis, I would argue, is incredibly important to help you understand between some of the different relationships. Finally, and then we have to wrap. In the show last week, you asked the question, is it rotation or distribution? Can you explain the difference and how you determine what it is, accumulation, rotation, distribution? So I tend to think of the market in three directions: up, down, or sideways in any chart. That's my simple way of thinking of the world. An upward phase is accumulation, a downward phase is distribution, and rotation or consolidation is sort of a general way that I would describe a sideways market. Rotation for me, the reason why I keep talking about it now is because you've seen this change in leadership. The market going higher because of technology and communications names and consumer names. And then all of a sudden it's the market going higher because of cyclicals like industrials and materials. So it's not as much a market call and it's more of a leadership call. Now I would argue it is more of a distribution effect. And I think we're seeing sellers outweighing buyers. I think we're seeing the signs not just of rotation, not just of consolidation, but of distribution. The way you confirm that is breaking some key levels. That's what we've not necessarily seen more widespread. And that's what I think we could be seeing in the coming weeks and months. We need to wrap the show, go to the 3 and 3 charts in 3 minutes. We're going to do it quick. And these are three stocks actually reporting earnings this week. And I think, when you think about earnings season recently, the fact that stocks haven't moved materially higher on some pretty decent earnings wins, I think is a concern. If you're fundamentally bullish and tactically bullish right now, I think that's a concerning sort of development. Walmart is maybe a good example of that. Pretty good report this morning before the open, pretty good bounce in the stock, trading up above 144, nearing 145, but by the close, back in the lower half of the day, and it was seeing distribution through the course of the day. So that's one of those good earnings reports, gaps higher, but you're seeing the weight of the market sort of pushing the stock higher. So up 2%, but I'm not super impressed by the dynamics during the day. That feels more like distribution. Interesting to see if that relative strength can improve, by the way. Walmart's been an underperformer for quite a while. Chart number 2 is Home Depot, is another stock reporting earnings this morning. You also have Lowe's and others, sort of this whole big box theme to earnings this week. What concerns me about the chart of Home Depot is the bearish engulfing pattern. Higher highs April into May, lower peaks in momentum April into May. That tends to be distributive. We're now breaking the lower end of that range, which is fairly negative. I think breaking the 50-day around 310 would be sort of a further hit for that. Finally, you also have a sub theme of some Chinese internet stocks, things like NetEase, NTES. This is an interesting one. Reminds me of some technology stocks that are right at support. NetEase is finding support at its previous lows, also at the 200-day moving average. My number one question for NetEase, can it hold 100, that big round number, which more often than not ends up being a significant point to pay attention to. Folks, that is our show for today. Thank you so much for joining us. every weekday after the close for the final bar. A special thank you to Joe Rabil from Rabil Stock Research sharing his thoughts today. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.